This review combines deep research, human expertise, and AI insights for unmatched accuracy. While the voiceover is AI-generated, the analysis delivers real value. You're with ChannelVest. This is your analysis. Get ready to dive deep into Fidelity's Bitcoin ETF, ticker symbol FBTC, to see if it lives up to the hype. Bitcoin has been making headlines with huge price swings. Stick around to find out if FBTC is the right way to ride this wave.
You won't believe it. What happened in January 2024? The SEC approved 11 spot Bitcoin ETFs, including FBTC. This sent shockwaves through the crypto market, signaling legitimacy and boosting investor confidence.
You're with ChannelVest. This is your analysis. This is insane. We saw massive inflows into Bitcoin ETFs, a total of $115 billion, and FBTC snagged a whopping $22 billion of that.
That's right. The Fidelity-wise Origin Bitcoin Fund, or FBTC, is all about tracking Bitcoin's performance as closely as possible. It does this by using the Fidelity Bitcoin Reference Rate, or FBRR, which aggregates prices from multiple Bitcoin markets, to give a reliable picture of what Bitcoin's actually worth in US dollars.
But wait, there's more. FBTC actually holds real Bitcoin, stored securely with Fidelity Digital Asset Services. That means when you invest in FBTC, you're getting a piece of the real Bitcoin action. And here's where it gets really interesting. FBTC has a super low expense ratio of 0.25%. That's important because a lower expense ratio means more of your money stays invested and working for you. Now let's compare that to the Grayscale Bitcoin Trust, or GBTC, which has an expense ratio of 1.5%.
That difference in expense ratios can significantly impact your returns over time. Remember, fees can eat into your profits, so a lower expense ratio like FBTC's can make a big difference.
You're with ChannelVest. This is your analysis. This approval ignited Bitcoin's price, pushing it past $100,000, peaking at a mind-blowing $104,000 on December 5th.
The ETF approval signaled that Bitcoin was going mainstream, attracting institutional investors who were previously hesitant. This influx of institutional money drove up demand, and of course the price.
Fast forward to December 2024. Bitcoin went wild, briefly exceeding $100,000 again before taking a dip. Talk about a roller coaster. What was behind this crazy ride?
There were a few factors at play. The Trump administration's pro-crypto stance and proposed regulations fueled speculation and excitement in the market. At the same time, we saw major financial players like Standard Chartered jumping into the game, opening crypto trading desks. These events contributed to the volatility we saw in December.
You're with ChannelVest? This is your analysis. Let's compare FBTC to two other big players. The iShares Bitcoin Trust, IBTC, which boasts a whopping $53 billion in assets. And good old GBTC, holding strong with $21 billion. FBTC is holding its own with $22 billion. What'd you say?
Absolutely. Assets under management, or AUM, is a key indicator of an ETF's popularity and liquidity. The more assets an ETF holds, the more attractive it becomes to investors, which can lead to even more inflows.
Okay, time for a reality check. Investing in anything related to Bitcoin is risky. This is not your grandma's savings account. Don't just take our word for it. Hit that subscribe button and leave a comment. Let us know your thoughts on Bitcoin and FBTC. This is a conversation we need to have.
You got that right. Let's break down the risks. First, we have market volatility. Those wild price swings can translate into big losses if the market moves against you. Second, there's the risk of regulatory changes. The government is still navigating the crypto landscape, and new rules could significantly impact Bitcoin's value. And finally, don't forget about technological risks. Hacking glitches and storage issues are all very real concerns with digital assets.
Let's put those three Bitcoin ETFs side by side. IBPC, FBTC, and GBTC. We're talking AUM, expense ratios, and any unique features.
So IBTC has the biggest AUM and a competitive expense ratio, making it a popular choice. FBTC comes in with Fidelity's solid reputation and a low cost. And GBTC, while it has a higher expense ratio, has an established track record.
Let's say you've done your research, weighed the risks, and you're ready to jump into the Bitcoin ETF game. First things first, you'll need a brokerage account.
Once you've got your account set up, it's time to choose the right ETF. Go back to our comparison. What's most important to you? AUM expense ratio, or the issuer's reputation. And when you're ready to buy, make sure you understand order types. Market orders buy at the current price, while limit orders let you set your desired price.
All right, now for the big question. How much of your portfolio should you actually put in Bitcoin? Remember, this is for information purposes only. It's not financial advice. Do your own research, talk to a financial advisor, and make smart choices.
Even the experts have different views on this. BlackRock, known for its cautious approach, suggests up to 2% for diversification. emphasizing Bitcoin's volatility. Peter Hughes from Evolve Investing advises no more than 5% for risk management.
This is where your personal risk tolerance comes into play. Think of it like this. Would you bet your rent money on Bitcoin? Probably not.
Right. Exactly. Risk management is crucial. Remember diversification. Don't put all your eggs in one basket. Bitcoin should be a small part of a well-rounded portfolio. Also, regularly review your investments and adjust as needed. And last but not least, stay informed. Knowledge is power when it comes to investing.
Will Bitcoin ETFs continue their meteoric rise? Will the regulatory landscape shift again? And most importantly, is FBTC the right choice for you? Hit that subscribe button and leave a comment. Let us know your thoughts on Bitcoin and FBTC. This is a conversation we need to have. Now let's shift gears and talk about taxes. It's not the most exciting topic, but it's crucial to understand how investing in Bitcoin ETFs affects your tax situation, especially compared to holding Bitcoin directly.
That's right. Both Bitcoin ETFs and direct Bitcoin holdings are treated as capital gains for tax purposes in the United States. But there are some nuances.
Nuances. That sounds complicated.
It's not as bad as it sounds. With Bitcoin ETFs, your gains are taxed just like regular stocks. If you hold the ETF shares for a year or less, it's short-term capital gains, and you're taxed at your normal income tax rate. Hold it for more than a year, that's long-term capital gains, and you get those sweet reduced tax rates.
Okay, that makes sense. What about holding Bitcoin directly? Is it taxed the same way?
Similar, but with some extra paperwork. The IRS sees Bitcoin as property, so you have to keep track of every single transaction. Buying, selling, trading, everything. You'll need all those details to report your gains or losses accurately.
Sounds like a headache. Are there any advantages to using a Bitcoin ETF when it comes to taxes?
Absolutely. One big advantage is that you can hold Bitcoin ETFs in tax-advantaged retirement accounts, like Roth or traditional IRAs. This can potentially defer or even eliminate taxes on your gains. That's a huge plus that you don't get with direct Bitcoin holdings.
That is a big deal. So ETFs simplify the tax reporting process and offer some tax advantages.
Got it.
Now,
let's talk about the future of Bitcoin ETFs. The approval of spot Bitcoin ETFs has opened the floodgates for institutional investment. Big players like BlackRock are now recommending Bitcoin as part of a diversified portfolio.
you're with ChannelDist. This is your analysis. It's like the whole financial world is waking up to the power of Bitcoin. What does this mean for the future of Bitcoin ETFs?
Well, with the potential for more crypto-friendly regulations on the horizon, things are looking very bullish for Bitcoin ETFs. Increased institutional adoption is a major driver. As more institutional investors jump on board, demand for Bitcoin will continue to rise, pushing prices higher.
So Bitcoin could go even higher. How high are we talking?
That's what many analysts are predicting. Some are even saying Bitcoin could reach $150,000 in the short term. And in the long term, hold on tight, because some predictions are going as high as $500,000 within the next 3 to 5 years.
Whoa, that's a lot to process. But let's be real. Bitcoin is known for its wild price swings. How should investors approach this volatility?
That's a great question. It's crucial to remember that Bitcoin is still a relatively new asset class, and it comes with inherent risks. Diversification is key. Don't put all your eggs in one basket. Spread your investments across different asset classes, including stocks, bonds, real estate, and yes, even crypto.
Diversification. It's like having a financial safety net. Remember, this is for information purposes only. It's not financial advice. Do your own research. Talk to a financial advisor. And make smart choices.
Exactly. And don't invest more than you can afford to lose. That's rule number 1 in investing, especially with volatile assets like Bitcoin.
All right. We've covered a lot of ground today, but before we wrap up, let's address some common questions about Bitcoin ETFs. A lot of people are still confused about the difference between spot and futures-based ETFs.
Sure. Remember spot Bitcoin ETFs, like FBTC, hold actual Bitcoin. They aim to directly track the price of Bitcoin. Futures-based ETFs, on the other hand, invest in Bitcoin futures contracts, which are agreements to buy or sell Bitcoin at a predetermined price and date in the future.
So one is about owning the actual Bitcoin, and the other is about betting on its future price. What are the pros and cons of each?
You got it. Spot ETFs offer a more straightforward way to gain exposure to Bitcoin's price movements, but they can be affected by factors like storage costs and security risks. Futures-based ETFs may be less directly correlated to Bitcoin spot price because they deal with contracts rather than the asset itself. However, they can provide some advantages in terms of tax efficiency and liquidity.
Okay, that makes sense. So which one is better?
It really depends on your individual investment goals. And risk tolerance. There's no one-size-fits-all answer. That's why it's so important to do your research and understand the nuances of each type of ETF before investing.
You're with ChannelVest. This is your analysis. We're all about empowering you to make informed decisions. Don't just take our word for it. Hit that subscribe button and leave a comment. Let us know your thoughts on Bitcoin and FBTC. This is a conversation we need to have.
Absolutely. Now, another common question is about the risks involved in investing in Bitcoin ETFs. We've touched on some of the risks already, like market volatility and regulatory uncertainty. But there are other risks to consider, like liquidity risks.
Liquidity risks, what does that even mean?
It means that there may be times when it's difficult to buy or sell shares of a Bitcoin ETF without affecting the market price. This can happen during times of extreme market volatility or when there's a lack of trading volume.
Okay, so it's like trying to sell a rare Beanie Baby during a market crash.
Yep.
Got it. What other risks are there?
There's also the risk of tracking errors, which is more common with futures-based ETFs.
Cracking error sounds like a technical glitch.
It can be. Basically, it means that the ETF's price might not perfectly mirror the price of Bitcoin. This can happen due to things like the cost of rolling over futures contracts or differences in market sentiment between the spot and futures markets.
Okay, so it's like following a map that's slightly off. You might end up at a different destination than you expected. How can we mitigate these risks?
The golden rule is diversification. Don't put all your eggs in one basket. Spread your investments across different asset classes, including stocks, bonds, real estate, and even crypto. And don't forget to stay informed. Keep up with the latest news and developments in the crypto world.
Knowledge is power, especially when it comes to investing.
And last but not least, don't be afraid to seek professional advice. A qualified financial advisor can help you assess your risk tolerance, develop a personalized investment plan, and navigate the complexities of the crypto market.
So how can they decide which Bitcoin ETF is right for them?
Again, it comes down to individual goals, risk tolerance, and investment preferences. Some investors might prioritize low fees, while others might be more drawn to an ETF's track record or the reputation of its issuer.
You're with ChannelVest. This is your analysis. We're all about giving you the tools and knowledge to make smart investment decisions. What are some key factors to consider when evaluating Bitcoin ETFs?
One of the most important factors is the expense ratio. As we've discussed, lower fees are always better.
Absolutely. What else should investors keep in mind?
Then there's the ETF's tracking error. You want an ETF that closely mirrors the performance of Bitcoin.
No one wants to end up on the wrong side of a tracking error.
And then there's the ETF's liquidity, which refers to how easily you can buy and sell shares without impacting the market price.
Liquidity. It's like having a smooth and easy ride on the investment roller coaster. What's the last factor to consider?
Finally, consider the reputation and experience of the ETF's issuer. A reputable issuer can give you peace of mind, knowing your investment is in good hands.
Okay.
So is FBTC the right choice for you? Ultimately, that's a question only you can answer based on your individual circumstances and risk tolerance. But we hope this deep dive has given you the information and insights you need to make a smart, informed decision. Hit that subscribe button and leave a comment. Let us know your thoughts on Bitcoin and FBTC. This is a conversation we need to have. You've been hanging out with ChannelVest, where we bring the fire to financial analysis. Until next time.
Stay curious and invest wisely.